Hello, good weekend to all. It's Adil bringing you a review of the European markets for the trading session. We are approaching the 29th of March 2021. Be sure to visit my site www.intermarket-analysis.com, inter-market-analysis.com, and be sure to obviously want to be much more active on Twitter as well. Okay, so in terms of the markets this week, it's all about the Suez Canal. Okay, that's the focus at present. Let's just quickly bring up the FTSE. Again, that's not something that I certainly discounted. I expected the ship certainly to be dislodged and certainly everything operating as normal, but that certainly hasn't been the case. Hence the reason why oil prices certainly have pushed higher here. Just bring up a chart of Brent. Okay, so we've certainly bounced from this daily chart, as you can see here. Obviously, Suez Canal scenario certainly helping oil prices push higher. Okay, we've got resistance here now, and obviously it all depends on how fast they can dislodge this potential ship that seems to be stuck in the strait. Okay, so in terms of the other variables as well, fundamentals, let's quickly go over those before I look at the technicals. In terms of the FTSE, obviously is a commodity index, so that's being helped to a large extent. French CAC as well, although I do expect that certainly to taper off given the weakness in demand. In terms of the US overnight, we've got infrastructure talk. Again, that's been negated by higher taxes, so again, that's certainly relatively negative. In terms of the block trades as well, there's a story going around with regards to potential 20 billion plus of US dollar block trades, and again, that's apparently going to indicate a risk-off scenario, but that certainly wasn't the case towards the evening Friday. In terms of European markets, the concerns regarding increased variance. Germany's calling for a stricter lockdown again, a 14-day lockdown. France certainly remains the epicenter in terms of Europe, in terms of the obviously variants that are being spread and the increase in the infection rates. Merkel's support certainly deteriorates as well. Apparently, it's created over the weekend in terms of the latest polls, and EU vaccine rollout fiasco certainly continues. Now, the only bullish scenario for Europe really right now is QE, and that's certainly did light a fire in terms of the market, and also a weaker euro as well. Like as you can see here, the euro USD certainly plunging on the 60-minute chart. We got as low as 1.1760. That certainly seems to be the stimulatory factor in terms of helping the European obviously bourses to a large extent. Now again, that's another factor that I certainly have failed to certainly project into my analysis in terms of European equities, but again, we live and we learn. Okay, so in terms of the German DAX, now we did have a initial swoon, okay, in the market, and I was expecting a potential right shoulder or potential weakness in this zone, but the factors I obviously failed to take into consideration is number one, QE, and number two, obviously a weaker euro, and that certainly is providing the immense stimulus in terms of German exports. And again, in terms of German equities apparently as well. So that's certainly something that I'm going to be focusing on extra this week. A weaker euro, and obviously the QE obviously factor as well. Even though obviously we've got increased infection rates, we've got vaccine, we see chaos in terms of the export controls, total shambles in terms of the domestic obviously jabs being organised, and certainly with regards to variants, and certainly with regards to a stricter lockdown, given the fact that the UK now, as of tomorrow, the rule of 6 applies, and that certainly isn't the case in Europe. Okay, so German DAX again is rallying on the back of bearish news. Again, all focuses on a weaker euro and obviously ECB QE, and let's see if that continues to new highs. The French CAC as well, it did plunge on the back of obviously France being the epicenter now in terms of infections and the variants. So France is in a really precarious situation. Their numbers certainly can continue to go higher, even though vaccinations, even though they've been lackluster, certainly aren't working from what we can see. It looks like the variants certainly are taking over. It's either the vaccine or the variants, and the variants certainly seem to be dictating. As you can see here, French CAC exceptionally weak compared to the German DAX as it's testing new highs, whereas French CAC obviously just about closes the gap on the daily chart. 60-minute chart gap fill here. Again, if the market does push high in the French CAC, you are looking at gap fill at 6060. So keeping an eye on that in terms of the next potential move there. Euro Stoxx again very, very bullish, given the fact that we did have a swoon down to 3780 and we've rallied and obviously reversed almost 100 points. So very, very impressive in terms of the Euro Stoxx as well. Do we actually puncture to new heights? That's the question. Now the previous resistance or key resistance zone is around the 3868 zone. It'll be interesting to see what the German DAX does, and obviously Euro Stoxx will certainly follow suit. In terms of the FTSE 100, okie dokie, weekly chart. FTSE at the moment still remains lackluster. Okay, now we know the key resistance is at 6880 on the weekly chart, so we've not punctured that or broken through that as of yet. Daily chart resistance is seen at 6800, so watching out for that, and obviously 6900. So if we do obviously breach 6800 and push higher, then obviously the bulls are certainly back in control. For now, we're holding that fib 75% retracement, looking for that right shoulder, looking for a H&S move down. 60-minute chart, previous support equals resistance at 6740. We did break through that after hours. The next potential resistance now going into Monday will be, and again this has been helped by the Suez Canal scenario. Again, I didn't expect that to continue into the weekend. I was expecting a resolution, and obviously oil prices falling off, and that certainly wasn't the case at all. Also, obviously, rising yields, weakness in China, etc., etc. That was all expected to have that knock-on effect. Now, FTSE hit a pivot low of 6620. Ever since then, we've rallied quite impressively on the 60-minute chart. As you can see here, hit resistance at 6730 zone. It looks like we've breached that. Next resistance now is 6790. 6800 and then 6810. Obviously, if you break through that, then you are looking at testing 6880 and 6900, and I'm certainly finding it very hard to believe that, but if we do, it's due to the Suez Canal scenario helping oil prices higher. So keep that in mind, and keep a chart of the obviously Brent as well in terms of the next potential move. Daily chart, obviously you can see here weakness, and we've had a bullish engulfing candle. Do we consolidate tomorrow before the potential next leg higher up to 6800? Be interesting to see. Or do we just break through and obviously hit 6900, and that again will be certainly interesting. Now, US equities certainly did stage quite an impressive rally. I mean, look at that move higher in terms of the charts on Friday. Super impressive in terms of the US equities, and that obviously triggered the rally in all equities globally. So be interesting to see how US equities trade, given the fact that obviously we've had a weakness in the Nasdaq as well. So nevertheless, the moves tend to be dictated by the US equities, so again keep a focus on there. Resistance in the FTSE is at 6800. We breach that, then obviously you're looking at 6900 next in terms of the daily chart. From what you can see at present, this is your key zone for now, and obviously 7000 is certainly beckoning as well. If that is the case and oil prices continue to push higher, any weakness in oil prices, again the rule of 6 certainly is helping the FTSE, given the fact that it's opening. Those factors certainly helping in terms of the market itself. So again, we wait and see, and we play these levels in terms of the market moves tomorrow. So wish you well, and watch out for that potential correlation. Weaker euro, increased QE, helping European equities to a large extent, obviously negated by the fact that you've got higher infections, higher variants as well, and total chaos in terms of vaccinations. So those three factors are certainly weighing on the European equities. In terms of the FTSE, the trigger generally tends to be US equities, oil prices as well, and we'll see in terms of US equities pushing high on the back of higher yields. We have got talk with regards to higher taxes, but I'll cover the US equities shortly now in a separate video. Wish you the best for the trading week ahead. Goodbye.